Hello, everyone. Welcome back to our channel. If you're watching this on YouTube or Facebook, welcome. Today, we're welcoming back a very handsome bearded guest who was on our channel about 3 years ago. I cannot believe it's
one of our first guests.
One of our first guests 3 years ago. And a lot of it was around lockdown time and probably bouncing back into kind of just after lockdown. This is Ashley Rich, who is our mortgage guru, local mortgage guru from St Barts Finance, just around the corner from our office, and always enjoy jumping on with Ashley and chewing the fat on the mortgage market. So welcome, Ashley. Welcome back.
Welcome, yes, fellow handsome bearded man. Yes.
The beard hasn't changed much your end, but looking at the videos, mine's a tad longer. But yeah, looking well.
Yeah.
Years has passed.
Yeah, thanks for jumping back with us, Ashley. I mean, it has been a long time, and like Matt was saying, we were last. Our first video with you was about mortgage holidays and the kind of things that were going on during the COVID lockdowns. A lot, I think, has gone on since then. You know, particularly if you look at things like interest rates for mortgages and all sorts of things. But we were just saying before as well, we're almost circling back to similar times with things like the mortgage charter and stuff like that. So we'll get into some of that today. But, you know, should we just start off by sort of getting your views on what's going on at the moment and what sort of rates lenders are offering to both landlords and normal buyers of properties?
Yeah, I'd written a few down based upon rates today, and sort of around the sort of 75% loan to value for a landlord. You're looking between sort of 5.6 to 6.2, depending on whether you're purchasing or remortgaging. If you're residentially buying with a 10% deposit, it's still 5.6 to 6.2. Rates are high. I was watching something that Martin Lewis was saying only a couple of days ago. He was sort of saying we've got so used to rates being so low that when you actually zoom out and look at the last 40 years, the average interest rate in the UK is 7.1%.
Yeah.
So actually, we're kind of sat at where the medium is, and there's a lot of people out there saying when rates come down, when they come down, we hope they come down. We kind of expect them to come down. When that will happen, or even if it will happen, we don't know, unfortunately. not as accurate as or informative as last time, unfortunately.
Yeah, I watched some of our old videos, and we said we were trying to see if we could catch you out on some predictions, but actually, no, there wasn't anything glaringly obvious. But yeah, obviously, I think remortgaging. I mean, personally, for me, remortgaging has been a massive thing this year. I remortgaged in February, and we'd come from a 5-year fix, 2.8, I want to say, and suddenly we were gutted to get 4.2. Now I'm actually feeling very grateful that we got 4.2 because it's obviously moved on since February. So it's been a very rapidly changing landscape on the mortgage world.
Well, yeah, I mean, inflation has actually dropped. So I think
today
it's just dropped below 8 today, which is great. And if there is going to be improvements, these are the kind of signs that we want to see.
Yeah.
Remortgaging for people at the moment is very tough. Very tough. So I've actually spoke with a landlord yesterday. You know, single mum. She's worked hard all of her life. She's been self-employed. She's got 2 jobs. She managed to buy 2 properties over the space of about 30 years, and that was her pension, that was her retirement income, and the payments went from like £300 right the way up to like 985. So she's gone from a nice sort of £700 a month to live on and to retire on to about 60 quid after tax. So you know, she sat there going, well, do I sell? Is it worth me keeping? Should I stay out of it? What should I do? Every individual's a bit different, but it does look like she might have to sell this and look to invest elsewhere, which is a shame. Real shame.
Yeah.
Obviously has a knock-on effect on tenants and everything as well. But when you touched on it with sort of inflation and remortgaging and things like that, how is that affecting people when they're applying for applying for a new mortgage product? Because obviously, with the cost of things having gone up, cost of services, utilities, normal things like that, food, outgoings, how's that affecting their applications?
Well, this brings me on to a really good point. So one of the things that I'm doing for my existing clients at the moment is phoning them about 6.5 months in advance of their date, because when you do a mortgage application, typically your mortgage offer is valid for up to 6 months, and so the day you apply, your rate is locked in.
Yeah.
So if hypothetically you had your mortgage rate due on the 31st of August, you could have been speaking to someone on the 1st of March.
Yeah.
And you'd have got rates like you were saying, like 4%. We back in, I think it was April, we had rates that were just under 4%. We had some 3.8, some 3.9s.
Yeah.
So you were potentially locked in that 3.9, and then when your mortgage kicks in August, rates are currently, 5.5%, 6%. You'd have got that rate there.
Yeah.
So what it does, if rates continue to go up, you stay with what you've got. But then if rates go down, you can
readjust. That's exactly pretty much what happened to us. We looked into it too early, like 9 months before, and then life happened. Summer got in the way, just lost track of that kind of period, and then we contacted them about 4 months before, and by then the trust budget had happened and the market had gone crazy. So we'd gone from those 2% up to those high fours, touching 5, and we did exactly what you said. We locked that in, and then there was a small recovery in February. They came back down again when the market's kind of stabilized a bit and dropped to 4.2. So that's pretty much exactly what you've described there. Lock it in early, but if the market recovers and the rates drop, you can always just go for a different product.
Yeah, and it's important to know, you need to be asking, right? The thing I'd say is always speak to a broker, because a broker will be able to tell you whether that lender will allow you to update the product later. And if you are going to update the product later, are they going to reassess you? Because lenders have been making lots of changes to their affordability because of national statistics, cost of living, so on and so forth, because they can't ignore it. No. If your utility bills did cost you £140 a month, now they're costing you £300 a month. Lenders can't ignore that. They can't just go, "That'll be all right," because the Office of National Statistics, where a lot of them take their data from, some of them are specifically, but most of them go off of ONS. So when they tell everyone that the prices have gone up, affordability then comes down. So it's important to know you've got someone who's not going to reassess you later on, sort of thing.
Yeah. Well,
so get that rate.
My understanding is it's always generally better, if in those circumstances, to stay with your existing lender rather than shop around, for that reason that you might not go through such a hard reassessment. Is that right?
No. So when we look at options, we'll always look at, so if a client's got a remortgage due in 6 months, we'll look at remortgaging them to a different lender, as staying with their existing lender. Now, lenders have been pretty good most of the time. It has been the best financial option to keep them with the people that they're with.
Yep.
There are a few lenders out there now that are putting their rates above remortgage prices. So I've got a couple who, boyfriend and girlfriend, both due at the same time. Really good. And I looked at both their mortgages. She's with a lender that we had to change because it was like 0.6% higher, and his was much cheaper to stay where he was.
Yeah.
So it is varied. I'd say the majority, you're better off staying where you are, depending on rates, but that can change overnight. So you've just got to keep an eye on it and look around.
I'm assuming that remortgage is where you're busiest at the moment. Are you getting many more new applications or people looking to buy, or is it generally remortgage that's keeping you busy?
Yeah, we are still getting some home movers, but I'd say it's probably flipped. So previously, about 20% of what I did was like remortgages, and about 80% was purchases. That's now flipped, and 80% is remortgage and 20% is purchase.
Wow, big change.
I've always kind of put home movers in 3 different categories. You've got like your luxury home movers, you've got your essential home movers, and then you've got your absolutes, the ones that have to move. So some, parents, couple living in a 1-bed flat, just been pregnant with twins. Funny enough, they have to move. They can't stay where they are. So, and then you've got your essentials, where it's like kind of need to move, really we need to move to this location because of work or whatever. And then your luxury home movers are the ones that are like, we don't need to move, but we want to, so we will. The luxuries, I'm not getting their phone calls. The essentials, they're still kind of going through. But the majority of people, if they're moving because they have to.
Yeah.
And what's the mood amongst those people when you tell them what their repayments are going to be?
You know what? I'm actually really impressed. I'm really impressed. It seems like a lot of people are very quite clued up.
Yeah.
I'd say 98% of people that phone me already have a figure in their head, and it is about right.
Yeah.
So I'm going, oh yeah, you know that point I gave you last year, and it was £700, it's now 1,360, and they're going, yeah, that's about what we expected, and I'm like,
Yeah.
for that, you know. So
I think there's a lot of information out, isn't there, at the moment for people to sort of work those things out. It's on, you know, things like the BBC Martin Lewis you mentioned earlier.
Yeah.
There are all the sorts of calculators on, which I think have helped raise expectations with things like that, I would imagine.
Yeah, I mean, it's still a hard conversation to be having with people, telling them that their premiums are going up by £300, £400, £500 a month. But the fact that there is so much information out there and people are going, rates have gone up, your mortgage payments are going up, people are already starting to make allowances in their own lifestyles to adjust for it, which is great. You know, that's kind of that's good. That's brilliant. It means that, you know, you're not so far out of the last 2 years, I have not had a client get through mortgage and tell me they can't afford to keep their property anymore. So that is great.
Let's hope that continues.
And I know that that's happening out there. I'm almost sure it is, but luckily, touch words, none of my clients have made that statement yet. So, God.
What about in the buy-to-let market? What's the, you know, we kind of touched on it earlier with your client there. I mean,
that's not the same conversation.
No.
It's looking at it practically, and it's assessing the risk. And I kind of feel like, because as a mortgage broker, when you recommend a mortgage to someone, you are always taking attitude to risk into account. So if you know someone's in quite a comfortable financial position, and they say to you, I'm happy to play with it. I'm happy to look at, say, a 2-year fixed, or even potentially even a tracker still, in the hope that rates will come down. And if they don't, I'll lock in later. Brilliant. But a lot of the guys, the conversations we're having is, like that client I was saying yesterday, we're looking at 5-year fixed because we know it stays in a positive.
Yeah.
That is the core principle. Is, can we still keep it? Can we still afford it? Is it still going to make money? Yes, but it's not going to make anywhere near as much as it was. So it's that kind of, what's your individual situation as to what's going to be best for you in the long term. And it's taking that, am I going to kick myself in 18 months' time if I take a 5-year fixed and rates do plummet back into the ground?
Yeah, or you sell the property, you know, because the thing is, you know, if the market recovers, prices recover, and, you know, they might not be able to get that property that they bought 10 years ago at a very good price again. So it's kind of almost riding the storm at the moment, I think, for many, in the hope that, you know, it's still a good long-term investment.
Yeah, and I find landlords are incredibly resilient. They have weathered out so many tax changes and rate changes and policy changes when it comes to landlords renting. And, you know, like I said, again, I don't know whether it's true or not. I did read somewhere that like 80% of rental properties are privately owned. They're not part of a housing association or council. Again, don't know if that's true or not, but
yeah, I think there's some stock in that, and we mentioned that off camera, that I think if the private rented sector market collapsed, it would be catastrophic to the UK property market, and I think the losers would be renters in the grand scheme of things.
I think it would be renters, and I think it would be homeowners. I think everybody would stand to lose, because if the property market got flooded with private owned landlords just offering their property, it will crash house prices, and then all those people that have worked really hard for all those years and bought that lovely shiny 4-bed detached for 400,000 end up in negative equity. I think it could be pretty bad, but hopefully, fingers crossed, that doesn't happen.
Crossing all our fingers, yeah.
Yeah, all fingers and all toes.
Okay. Well, I think we've sort of covered quite a few areas there in sort of what I think what is going on. And it sounds like there is still stuff happening, which is, means that's good. But yeah, it's definitely an interesting time, isn't it? And, actually, one thing we didn't mention there is the mortgage charter. So we've just seen that a number of the sort of high street banks, the ones that you kind of expect to see, have signed up to this mortgage charter. Can you tell us a bit more about what that is, Ashley?
Yeah, so the mortgage charter is essentially where their lenders are agreeing to forego a certain period of time before going through things like repossessions. They'll also make certain changes and allowances to your mortgage that they otherwise wouldn't have done. Such as, like we saw during COVID, payment holidays, converting it to interest only rather than repayment, or it's one thing that is important, it's up to a maximum of 6 months. It's not for 6 months.
Yeah.
Like some lenders are saying, we'll do up to 4. And then people are kind of going, well, no, it should be 6. It's no, it's up to 6. It's a limitation, and every lender's a bit different. But as like we saw with the payment holidays, it's not something you just do because it then makes that monthly payment cheaper. It is something you need to calculate and actually walk through with someone, because where you're not going to be repaying that capital for 6 months, that does have a knock-on effect later on down the road. So if you're feeling the pinch, but not in a bad situation, I would say try and not do it. But if you are, going through something, going through a life-changing event that is causing severe financial stress, please phone your lender and talk to them. There is humans at the other end of the phone that are there to help.
Great.
Well, speaking of nice humans, let's get you some business, Ashley. So for our watchers there, where are you based?
I'm based in, so I work for St Barts Finance, and I work at the Yorkshire Building Society in Bournemouth.
Yep.
On the second floor, that's where I am today. And yeah, feel free to pop in. I'll send over my credentials. So
yeah, we'll pop that in wherever you're watching this. We'll pop it in the description. But if you're watching it on maybe something like Facebook where we can't do that, give us a call, and we will happily pass Ashley's details over. And he's just very, as you've seen from these videos, just a really nice, down to earth guy that will tell you the facts and try and soften them as much as he can with that.
Yeah, so as much as one is able to.
Yeah. Perfect. Well, actually, it's always a pleasure to get you on. We won't wait 3 years, hopefully, to the next one.
No, I hope we speak to you in 6 months after this is all just a faint memory when house prices soar and interest rates crash. It'll be great.
Yeah, let's put a pin in that one, and we'll hopefully get you on with some better news by the end of the year.
Great stuff. Thanks, Ashley. Thank you very much indeed, and we'll speak soon.
Guys.
Bye bye.